Like I say, Safaricom out with the numbers after the market close. So we're seeing a first half profit up by 130%. So that's quite a big jump. Is that quite a big jump in your view?
First of all, the market is pleasantly surprised because we are factoring only about 20 to 25% jump in terms of its profit. So I guess this is quite a good news for the market, and particularly for that stock. And mainly some of the drivers that behind the rise in profits, actually the revision upwards of its tariffs. And you know, they revised it upwards by about 25%. So we know that really was going to have a big impact on its bottom line, and surely it's come to happen.
So now will we see this continuation in the second half of the year?
Yeah, definitely. We expect the same trend to continue since the confidence with the management is that they still have a greater control in terms of market share, particularly on the voice and also on the data segment. And we think going forward, there's no real threat coming from the rivals, and I guess going forward the market is pretty confident that, you know, in terms of its revenue growth, profitability, it's going to still be the same.
Well, we've had results out of the banking sector. Equity Bank, KCB and Diamond Trust Bank reporting some rather positive results. What are your thoughts on the kind of numbers we are seeing out of these three banks, and whether are we likely to see such numbers out of the others that are due to report in a few weeks' time?
First of all, we expect a slight revision downwards of the profitability generally for the whole sector. Just looking from the three banks that have gone ahead and released results, most of them came out slightly below expectation, and so we think that gives us a bit of a signal of what we expect for the rest that are coming through. So we think the results are going to be just in let me say slightly below market expectations, because about 2-3 weeks ago we felt that, you know, the sector was going to have really robust growth, following on the trend that we've seen in the first and the second quarter. But as KCB and DTB, that's Diamond Trust, and Equity have shown a slight downwards of its revision, with the exception of KCB. But so we think largely we're going to see a bit of a revision downwards on the profitability for the whole sector.
So the NSE 20 ending up 0.67%, really driven by East African Portland Cement. We saw that stock ending up 7%. Were there some major fundamentals moving that stock in today's trading session?
First of all, the market is doing quite well. But for the last 2-3 days, and particularly today, it was just sluggishly, actually sideways trading. I think the market is really trying to figure out whether there's really momentum to really push it ahead. And typically, as we get into the the last quarter of the year, there's generally a slowdown in activity, market activity. So I think, in our view, we're thinking that the market is going to trade sideways until the end of the year. Coming to East African Portland, are fundamentals really driving the stock? I think not. A 7% jump today doesn't really say much, because we still think that the company still needs a lot of catching up to do. The rest of the industry is really moving ahead and doubling their production capacities, moving into other regions, but the company has just done nothing on those fronts. So we think today was just a small jump that is not fundamentally driven. So we think we can attribute that only to speculation in the market.
And we also had Mumias Sugar going ex-dividend at the beginning of the week. We saw that share price falling back by around 8%. Has it recovered some of those losses?
Yeah, today we saw a bit of activity. It rose up about 3 to 4% today. But what is really dragging the performance of that stock has actually been what has been in the news of late for the last about 4 months. Rivalry with some of the rivals in the Western Kenya, where it's actually its base, and the story is there's been a lot of cane poaching, and as we speak right now, for the last 3 months, because of cane poaching, it's lost about 10% it's actually caused a reduction of 10% in terms of production in capacity, and we think that if they don't solve those problems, if they don't find a way to really curb that problem, then we expect the same projection of about 10 to 15% reduction in production capacity. So I guess going forward, the judge actually last week gave one of its rival firms the license to continue buying cane from its main base area as beginning next year in January. So I think we are going to watch the company for the next 2 months and how it plans to to curb that threat. And going forward, we think its performance is going to be based on how they react on that problem.